Okay, welcome. It's 6:41 on Wall Street. WTF? Anyways, hey, welcome to QuantBox Live, where we get our global macro on. Let me actually pull up the website. I'm logged directly into the cloud. There we go. Where we get our global macro on. Yeah, my name is Wayne McDonald. I'm an economist. I have a macroeconomics degree, bachelor, and a master's degree in financial management. I love data. The thing is, logging into 10 different databases from all around the world and then downloading it and putting it together and understanding it, very difficult. So we automate the whole process and plop the whole thing onto the Google Cloud. So much better. So now a retail trader has the same reach and depth as far as the data they have in their analysis as an institutional investor. Yeah, it's kind of like Bloomberg Terminal, except it doesn't cost you $1,000 a month. It costs a lot less than $1,000 a month. So, anyways, very cool. If you want to have data behind your analysis as far as investing and trading, you want to be able to compare two economies together. You want to know seasonality of a potential investment. So you're like, hey, I wanna sell euro dollar today, and you're like, okay, well, technically it is bearish and it makes fundamental sense, but this time of year it typically goes up. So it may fall, it just may not fall as much as you want. Or if it goes up, you won't be surprised. So, nonetheless, this is a data driven process that will allow you to have the confidence to let your winners run. If you're watching this on YouTube, you're watching it now many hours late. In fact, probably 6 hours late, delayed. Okay. So, I want you to know this information, but if you want it sooner, it's pretty simple. Go to quantbox.co, put in a credit card. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's go pro. I want to check something here. Yeah, cool. All right. We'll do this one. Boop, boop, boop. Boop, 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 boop. I put new coffee in yesterday's dirty mug. Is that okay? Yeah. It's one of those days, I'm telling you. All right. So let's take a look. And yeah, oil's low. Remember, it was 88 bucks. I remember because I bought it at 88 bucks. No. So, anyways, it's low. I'm still a bull. Low and bull. Yeah. S&P 500 hanging in there, although it feels heavy today. In particular Nasdaq. People are complaining that what Google only made $100 billion on their cloud. We expected 101 billion, right? So now, okay, the whole economy is going to collapse. Um, anyways, we'll see if that's just hype by the media. Nonetheless, euro dollar below 106, and then 34,000. Bitcoin catching its breath after that big move? Is it a fundamental move for Bitcoin, or is it just rumor on the ETF? Who knows? I do want to show you the risk gauges. Things have meaningfully changed in the last 24 hours. And we kind of talked about this. I think this was -4, -4 +1. And I said, for today, what I was hoping for is that this would be shifting slightly, at least less bearish. And well, yeah, it seems like that has happened. Okay, VIX is calming down. S&P 500 tried to rally a little bit yesterday off the bottom. Okay, when you look at Dixie and yields coming down a little bit, which is great. Okay, so on and so forth. When you add up gold, yen, futures, right? The yield on the 10-year, the dollar index, S&P 500, and VIX volatility. Hey, things have improved in the last 24 hours. Okay. So anyways, kind of interesting. Go back to the dashboard. Okay. And you can see lots of bearishness over the last few weeks. Look at every stock market has been down. Isn't that interesting? And almost parallel. Not a great divergence from any of the stock markets around the planet. So this is what we call macroeconomics. It peaked on Canada Day because that's the most important trading day of the year. Okay. And if you don't believe me, if you don't believe me, sign up for the training courses at Investor Boot Camp because I drive that home. And yeah, look, it peaked. So, anyways, it's been down, but look at the velocity of down recently, and it's everybody. Okay, not just one particular stock market. So that is macro. Oh, no, that's not what I wanted. That's what I wanted. All right. I was trying to find Bitcoin in here. It was such an outlier. There it is. So Bitcoin back down to reality. It spiked what, 13% yesterday? Maybe even more. That's a big day. So it's stabilized at 34,000. Anything else? Is there a clear trend? No, it's remember this is update. This is updated. This is including the last few hours. So um no, not really a trend. I see a little bit this way, but I see almost as much. I mean, it's slightly, I think I would slightly favor this risk on. In particular, if you get rid of commodities and crypto, no, it's just as mixed. I might just be seeing what I want to see. So yen strengthened, and these are doing as they should. Okay, and Swissy weakened. Both yen strength and Swissy weakness are unexpected. So, anyways, yeah, it's quite a mixed bag. All right, so the market's not sure, and that makes sense to me. Okay, retail is still heavily short Swiss franc. Now, remember, this is based on several weeks ago. We know that the Swiss National Bank would rather have a weak Swiss franc. So that makes sense, but not during times of geopolitical risk would you want to be selling Swiss francs. So it seems like retail is not pricing in risk from, or I should say specifically geopolitical risk. Oh, oh. Oh, all right. I'll have to look into that. Yeah, look at that. In the last 7 days, Bitcoin's up 20%. That's a good year for most asset classes. How'd you do last year? Oh, I am up 20%. Like, really? Holy smokes. Yeah, in 7 days, huh? Last 24 hours, we've been stuck at 33,800 to 34,350. Yeah, amazing move. Okay. The FTSE way down. Oil's come back to reality. Nasdaq way down, S&P 500 way down, DAX way down, Dow way down, Nikkei way down. Amazing, huh? All the stock markets are down. Okay, and that's typically what happens during geopolitical risk. Okay. The other thing that I prepared you for, as soon as it hit, in fact, um, is for Swissy to gain some strength, Swissy to gain some strength, Swissy to gain some strength, Swissy to gain some strength. And that also happened. Okay. So interesting. So today, and I got all this gobbledygook mess. This is the NASDAQ. And I know there's all kinds of lines here. It's just me trying different things, looking at, trying to find different ways to look at this to get a clear picture. That's all I'm trying to do. But let me highlight the general thought that's been the general thought for the last few days. But we had this big move. Okay, market came down and it hasn't broke that level. So maybe we try to continue up. It's a big ask, I know, but it's not incorrect. Sorry, the ghee in my coffee gets caught in the back of my throat. Oh my God. You're like, what's a ghee? Oh, you don't want to know. All right. Okay. And goes back to yesterday's planning, the day trading group. And I had this as a plan A down and a plan B down. Now I want this to go up, but it doesn't matter. Like that's easy. What I want is easy. Knowing my threats are more important. So that I want the pink, but I suspect these are the two areas of challenge. So my two opportunities are the pink arrows. My two challenges are going to be the black arrows. Is today Wednesday? Yeah, I think so, right? So we have ADP, another dumb prediction today. Is that right? No, or is that next week? Is NFP coming up that fast? Or is it next week? Does anybody know? What's going on? It's so funny. No, it's got to be next week. Is it next week? Wait. Yeah, it's so funny. All right. Well, let's bring QuantBox back. November. That's next Wednesday. Thank you. There we go. Next Wednesday. Good. Oh, whew. Means I got time. All right. Yeah. Commodities. I want to get. I want to try to get back into that oil, and we're at my next level of opportunity. This is my plan B. Okay, my plan BB is right in there somewhere. So let me drop into a smaller time frame, and it's hard to see because we're in my area of opportunity, my AO. And this is what oil's doing right now. Cool. Wouldn't it be interesting if it fell later today and then gave an opportunity to buy back? I know. But I fundamentally want to be long oil. So I'm going to filter all of these drops with that in mind. The farther it drops, the happier I am, as long as I'm not long in that moment. So I got to be picky and choosy about when I actually go long. And that's why we use technical analysis. Now, a lot of amateur traders make decisions because of technical analysis, and often that seems to work. Okay, but what in my opinion, what you should be doing is setting your trades up in advance based on fundamentals, and then use technical analysis to confirm it's time to enter. For example, like Bill Ackman's been getting a lot of press lately, and he was heavily short the bond market, and now he's no longer short the bond market. Well, he didn't make those decisions technically. He understands the flow of capital. So as soon as the Fed was jacking up interest rates, he started selling bonds. Why? That's what you're supposed to do. But not because his MACD told him. And now he's watching yields and the 10-year hits 5.0 and he stops. He dumps that whole position. Once again, not because a stochastic cross or an RSI, okay? But these things are used to measure. Okay. So, anyways, I will, right? I got my eye on you, WTI. Okay. I got my WTI on you. And so all these areas here are going to be very interesting. I got to watch. I got to watch these areas. So that might be the news. If today is Wednesday, then we have oil inventories coming out at 10:30. Okay. Okay. And maybe this week we get inventory increase. Wouldn't that be great? And that brings it back down to 80 or something. Well, once again, I will step off to the sidelines, wait for it to hit a level like like 80 or 75, wherever it wants to go. I don't know. But then I will continuously look for reversal patterns. Okay. So if geopolitical risk returns, we're going to see Swiss franc strength return as well. And here's a clear sign of opportunity. Now, even under the duress of geopolitical risk, this market behaved precisely as you would expect it. Okay. And now it may want to head down this direction to S2. It respected S1. Now it's respecting the 21 EMA. And the next move down in the direction of the fundamental trend is down to, you want to call it 51? Okay. That seems like it's plausible. I prefer to be under the predictive 21 than over. So you could wait or you take the chance and manage the risk. Longer term, if you're going to look at an Aussie move, okay, that's that. I want to look at USD yen and look at this 149.94 and a half. My line in the sand is 150. Oh my God, it's so close. Be careful, just out of the blue, bam, you might get yen strength. Okay. But I don't know. Bank of Japan might be changing their opinions. There's news coming up over the next week and stuff like that, opportunities for the Bank of Japan to speak. But I wonder, like, because they clearly created all these other spikes that I've highlighted in the past, like this giant one. That's clearly a central bank intervention, in which they're like, no way, Jose, right? Too much yen weakness at once. They may have changed their mind, though, on this, because yesterday, President Xi, president of China, grabbed a bunch of his boys and they walked straight into the central bank. What do you think they said? You're going to print this money, or we're going to line you up in the back of the building, and you can talk to our customer service department, right? Like, I don't know how to say it without being crude, but I think the central government is telling the central bank, you print money. You are no longer independent. You do what I want you to do, or there will be consequences. We know doesn't matter if you're a billionaire in charge of one of the largest, most popular companies in all of China. You can just disappear for a couple of years and come back humbled. Do you think the central bankers know that? Do you think when President Xi just walked in unannounced, do you think their knees were shaking? Mine would. Okay. So, what would China want from its central bank? A weak currency. So, what would Japan need to do to compete with China if China suddenly devalues its currency by printing money and creating stimulus? Well, Bank of Japan would have to do the same. Okay. A race to the bottom is what it's called. Problem is, China will be able to survive because it's still a growing country. In their recession, they have 5% GDP. Japan doesn't have any young people. So it's pretty much over for Japan on a global superpower kind of level. And yesterday, was it? It lost its second place standing in the world to Germany. So Japan is in decline. It's not like Germany is booming. Okay. Japan is in decline. There's nothing it can do about it. It's very, very much demographically driven. They're also a vulnerable economy. Can you imagine being a superpower, but you don't have any energy? It's just like it's too old world, right? So, and in fact, energy is the reason Japan got into World War II in the first place. It's not like they're sitting around going, you know who's really cool? The Nazis, right? No, it was in response to, anyways, we don't need to get into that. But nonetheless, Japan has to compete with China on a global scale. It's the only thing they got. They have to export. They just, whatever they got, they have to export. And so they need a weak currency. And they might have been hesitating around 150. But if China is doubling down, then Japan has to just go with it. Like there's no way out now, I think. Like if they used to be worried about 150, I don't know if they still are. I mean, you're like, but wait, that was 3 weeks ago. Yeah, well, it's a different world now. Think of everything that's happened in 3 weeks. It's been a big, powerful 3 weeks. So anyways, I wouldn't ignore this. I think we're two shakes of a lamb's tail away from 150. I'm just wondering out loud if things have changed in 3 weeks and that they don't drive it down. But it's a risk, man. It's a risk. When somebody puts an apple on top of your head, you're like, you should ask questions. You should question the rest of the exercise. So, anyways, yeah, it might be there, but it might not be. and I wouldn't be shocked if we do work our way up this time, but I wouldn't bet anything on it, right? But maybe I buy a dip. Okay, if we were to measure some of these things from this period, oops, wrong one. If we were going to include that standard deviation, that's equidistant. I want the other one. Where's my... What is that? All right, well, I don't care about that. All right, I don't want to sit here and fart around with... Let me try one more time. Insert indicate channels. That's probably what I want. Of course, I grabbed the one I already have. All right. So then I want linear regression is what I want. So channels, linear regression. Thank you. Finally. Welcome to the world, Wayne. All right. That would put this, if it did spike down, if we hit 150, then the expected low would be only 149. So the first time it dropped all the way down here. The second time it kind of dropped to here. Okay. The next time it dropped here. So this time it only drops. And then what? Breach. Use 150 as support. Okay. Okay. The standard deviation from the mean is narrowing. And that's what this other thing was trying to tell us, by the way. If we go back to that, insert indicators, where did I have it? Standard deviation. See, it's narrowing. It was super high here on the spike, and it's narrowing, which means each time we go to that 150 level, it's dropped less than it's dropped before. Okay, so the new spike will probably look like this. Probably, I don't know the future. Probably look like this, and then back down. Because what we're trying to do, what standard deviation is measuring, is that. Okay. Okay. So again, you want to look at what it's doing is, that's called sigma, is what you're going to do. Sigma. That's the variation. And then you square root it just to standardize it. Okay, so you got to watch that right now is all I'm saying. You got to watch that. I don't know how that's going to play out. And right now, yen is strong. Okay, so that's interesting. And so clearly that line is still valuable. We're really stuck on Nasdaq, and this week, I mean, I want S&P 500 and Dow to go up, but a lot of these companies that are reporting, yesterday was Alphabet and Meta and Microsoft, obviously very techy type companies, right? It's very NASI growth kind of companies. So we have more coming out in the next 48 hours. So we're kind of held hostage by that. So I don't know. We could just got to get through this week. Okay. Next week is interesting because ADP, non-farm payrolls. So, which is next week. See, I'm talking to my own brain. It's next week. Yeah. Join the stock trading course. We have an amazing lecture coming up today on business cycles and seasonality. And what I'm setting up is to understand if we're looking at these things to know where we are, are we in a growth part of the cycle, or are we in a contraction part of the cycle? That one is risk and the other is reward, right? So how will you know, right? How do you know? Like, you can guess where you are, but how do you know things have changed? How do we know we've gone from a good economy to a bad economy and not 6 months late? I'm going to teach you that in 7 days from now. But I have to tee that. Before I can do that, I have to tee it up. I have to set it up. So we have to talk about business cycles, and really there's some psychology, right? Right, behavioral finance in there, like how does the market feel? Is this is why the market is frozen and then suddenly will snap, right? So we got to talk about all that. So I set it all up, but I also have to tie in the valuation models that we've been talking about, and show you how to change your valuation models once you start changing your assumptions. And then the next week, how to know to protect your money before everybody else. And then when there is blood in the street and people are panicking, how to be the one that knows it's time to buy. So I just have to teach you how to be the opposite of every other investor in the market. Or Bill Ackman. When COVID hit, he saw it as an exogenous shock. That's one of the things that can change the business cycle. So he shorted using options to protect his stock position. He shorted when other people were not shorting. Then he made a boatload of money very, very quickly on those options. And so when COVID finally hit the United States, the markets dropped and we had closures and everything. Well, he made money on that because he acted before everybody else. And then when everyone was panicking, he took all that money he made during off of his hedge. He knew to remove the hedge and he plowed it all back into the stock market and bought everything cheap when it was blood in the streets. Remember, you could buy like cruise ship companies for $5 a share. You could buy casino companies for $5 a share. Bill Ackman bought them all back with the money he made by hedging. And I'm like, so that's it. That's all you have to do. So I'll teach you how to be the smartest person on Wall Street. Why not? We should do it because this is the right time for those conversations. So anyways, but not contrarian. No, 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 no. Denise says contrarian. No, 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 no. There's a difference to it. It's not contrarian. It's knowing more. So it's still trending. No, it's truly, I'll show you. It's just you have better data. So you're like, recession. It's not contrarian. You just like, based on, and I'm going to show you a couple of ways of doing it. You're like, oh, technically now, based on our technicals, not the market. The market's late. The market's always late. The government's even later. So it's just like, no, you get your signal faster based on logic. Okay. And so you behave a little sooner. And then once everyone else just happens to know, because now it's common sense, common knowledge, you will also know sooner that the bottom is put in. But it's not contrarian. It's everyone wants the stock market to go up. You just know when to hedge sooner and when to buy back in sooner, but it's still a bullish trend long term, but not contrarian. Yeah. 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 So cool. But if you have a little counter trend, DNA, this might be perfect for you because then you won't have as much hesitation as someone that doesn't have that. So, it'll be helpful. It'll feel instinctive or natural. So, anyways, cool. Well, that's it. That's all I got for today. But we have a very busy day, and I will be around. So I'll see you. Yeah, I'll see you when I see you. So peace on earth. Wait, what? Yeah, peace on earth. May the pips be with you. May your profits be above average.